Netflix posting a big jump in subscribers for the fourth quarter, proving that it's still the big winner amid stiffer competition. So what is next? Consolidation's been a trending topic within the industry over the last several months after reports of talks between Paramount and Warner Brothers Discovery. When asked about M&A in their earnings call, Netflix's CFO made it clear about a space that they are not interested in.
We're not interested in some of the big linear assets that may or may not be available. We also noted that in the letter. And so I think that's how you should kind of think about our, what's out there to go after.
So for more on the future of streaming and the entire space, we've got Mark Debevoise, who is the Bright Cove CEO, joining us here in studio. Mark, great to see you. I mean, when you hear comments like that on the call, does it mean that Netflix perhaps is prioritizing its attention elsewhere in order to deploy capital, make strategic, maybe not acquisitions of linear, but elsewhere, whether that be content or some smaller player?
I think they realize that they can not effectively run the table, but run a tremendously successful and still growing business by really just acquiring content and content rights in the right bundles and the right packages. You saw the deal yesterday that they announced with the WWE. That's a really big, broad bet on how they can amplify their ad business, in my opinion. They're going after a much larger audience per event, in that regard, and that's going to help them drive sponsorships, drive bigger reach for their ad business, rather than so much frequency that they get from delivering, sort of series and scripted series. And you saw them peel back their investment in scripted series last year a bit. Interestingly, you saw their traffic go down a little bit, but subscribers go up, right? And you saw that strong finish to the year. I think that's tremendous for them. It gives them a lot of confidence that this strategy of going after content rather than full companies is probably the right answer for them.
So it sounds like you think we could see more similar deals to what was just announced in this week with WWE.
Yeah, I mean, I think, look, the other streamers have pulled back on content and marketing spend. They're having to rationalize their technology spend. That's effectively what Bright Cove does for many of these companies. We help them solve that technology cost problem. And Netflix doesn't have those issues, right? They've built that technology stack. It's in the right place. It's at the right cost level. They are profitable, so they can now swing for those pullbacks that the other companies are having in content and marketing. They can go after those subs. They can go after those shows, and they can find the right ways to invest and really drive subscribers.
How dependent is Netflix on advertisers continuing to spend and even ramp up the amount of campaigns that they're running?
Yeah, I mean, I think it's really interesting. You saw it subtly in their earnings call that they're going to raise price on the sort of more premium subs with no ads and keep that price low for the ad tier. When I was running Paramount Plus or CBS All Access, we had a significant lift from that ad, that ad-supported tier. You could get dollars and dollars per sub by delivering those ads. So when you see that $5, $9, $10 lower price point, you should be adding sort of 50, 60% of that in ad dollars, on a typical basis. So you start to see they may be agnostic as to where the subscriber goes because they're making just as much money on that ad tier as they are effectively on some of those lower end premium tiers.
Mark, I know you work with a lot of these streamers, but where does this leave the competition within this space? When you get a report like Netflix here, it's so dominant within the streaming industry. How then do you think executives of some of those smaller players are looking at this report, and do they have any ability really to compete?
So I absolutely believe some of the larger streamers can get to a very profitable and nice sized business at those 40, 50, 60 million subscriber ranks. So there's going to be numerous broad players out there over the long run. And the fact that they were running those businesses unprofitably for the last few years is probably a thing of the past, right? They're headed towards that profitability cliff. But then there's another 200 plus services that Nielsen tracks in their other category of streaming, and that's one of the fastest growing categories you see. So I think streaming is really just in a transformational phase. Netflix is the behemoth. They're gonna, effectively last forever for a very, very long time and be in the catbird position. But there's going to be dozens of other services, if not hundreds, of what I would call more niche and targeted services that are going after 1 million to 10 million subscribers and finding a great content strategy that can be profitable in that bucket. And that's just in the US. You go internationally and you realize that the cable bundle isn't deteriorating the same way. That channel bundle in Europe is holding together a little bit better. And so the broadcasters and the local and regional players have real strength. They get the big content rights. They're able to do it on both linear and streaming platforms, and they're able to execute in a different way. That's why you haven't seen effectively the FAST revolution, the free ad-supported streaming TV revolution that you see in Roku channel or Samsung TV Plus. it hasn't spread globally as well, right? It has been held back by the fact that the regional players are actually pretty strong in most of the other territories around the world.
If more of the sports licensing and the broadcasting goes towards deals with streamers, though, is that lighter fluid for the deterioration of some of the cable bundles?
I like what WWE did here. They really emulated the NFL, the successful strategy of having it on multiple places. You have SmackDown on cable with NBCU. You have NBCU doing big events on NBC. They own in Peacock the WWE, former WrestleMania rights and those pieces. You have Raw now on Netflix, going forward. That's a pretty broad strategy. I think Nick Khan and his team have realized like having that exposure for your league is going to really, amplify the longevity of that league and the long-term audience. And so yes, you'll see deals with streamers, you'll see deals with broadcasters, you'll see deals with broad set of platforms from some of these leagues. And then look, as you get down in sort of smaller leagues, you may see more tight deals. Look at the NHL, one of our customers at Bright Cove, we manage streaming for them, but not the long-form streaming rights because those are captured by ESPN Plus, right? So you'll see individual deals with certain leagues that have unique capabilities.
Mark, always a pleasure to speak with you. Thanks so much for coming in studio here.
Yeah, great to be here, Brett. Thanks so much.